Hey, this is Justin with DayTradeTheMarkets.com on April 29th. A nice rally in the index markets today. I wanted to take a look at the rally in the ES or the emini S&P and the YM or the mini Dow and the NQ or the Nasdaq, and just kind of compare them and really show how the aggression bars and various other pieces of evidence were showing us that bulls were in control for the first 2/3 of the day, and then that selling was starting to come in at the end of the day. So I just wanted to kind of go through that. Here's a quick look at the ES. Here is the Nasdaq, and I'll break this down in more detail in just a second, but I just want to give you an overview. Here is I need to space that out. Here's the mini Dow. Well, you can actually see Friday. This is interesting. Friday was a pretty good day of consolidation, and you can see the market traded between the support and resistance zones there nicely, where today was more of a breakout day, and I'll explain that until it consolidated here at the end, and I'll explain that as well and show the difference on that. But you know what, why don't I go back to the ES and to explain, kind of give an overview if you're not familiar with everything that this does and how it can potentially increase your edge and help you make a little bit better sense of the market in real time. Let me give you a bit of an overview of what this is. This software program is designed as a tool, so it's not a system. It's not for people that are looking for black and white, robotic, or not to think. This software is designed to give you really good, unique, kind of one-of-a-kind evidence that then you can then use to help you make better decisions in real time, whether that's by using this software as a standalone like some people do, or whether it's using this as a confirmation or a decision aid to really help you avoid more of the losing trades in your another method you may use, and give you more confidence in getting into some more successful trades or higher probability trades in a method you might use, or to hold trades longer, to bail out of losing trades earlier, that sort of thing. But what we look at is we look at bigger picture bias and bigger picture levels. So that's important in kind of giving us a bigger picture context. And then we also want to put the market in context in real time. And you can see all of these pieces of evidence come in real time, starting with what we call relative aggression bars. That's really our first building block of what we do. And then we look at high velocity moves. We have support resistance that forms in real time, deceleration and divergence that forms in real time, and also a filter, kind of a path of least resistance on the short term that forms in real time. And so the idea is that these are each pieces of the puzzle. The more of the pieces of the puzzle you have, the more clear you can see what's going on in the market, and then you can determine much more clearly whether bulls are in charge, whether bears are in charge, whether it's a consolidating market, and how you can then get into the market to better benefit yourself, hold on to trades longer when you're in winning trades, bail out of trades earlier if it starts going against you. You're really seeing kind of under the surface of what's going on in the market. So that's kind of an overview. Now if I go back to the chart here, what I'll do is I'll just take everything off of there and kind of go through them one by one, and then I'll show you this in each of the markets. So here you can see is a chart with nothing but price action on there, and this is obviously at the end of the day. But heading into the day, we have a report where we really like to focus on bigger picture bias and bigger picture key levels. Okay, that gives us a context, kind of the bigger picture, whether you're swimming upstream or swimming downstream with the current. And so heading into today, this was a bit of our report. We were really, our bigger picture bias was up. So all things equal, we'd rather be on the long side, and until these levels are taken out, that's our feeling. Okay, so in other words, this is our bias heading into the day, bigger picture, and that would change if this happened. Okay, then we wanted to monitor these levels as resistance, these levels as potential support. So that doesn't necessarily mean you just blindly trade against them. It's just areas of the market that you really want to watch heading into the day. So heading into the day, we knew that we wanted, all things equal, our bigger picture bias was up. And then we knew also that, we draw these lines before the day starts, right there at 82.75, and then also around the 92 area, 91 quarter to 92 quarter. Okay, so that's an area of potential resistance. This is an area of potential resistance heading into the day. Now we opened right around there, and it did form resistance and sold off, 3 or 4 points early in the day. Then we took that out, and I'll show some other tools how you can see this was really developing in real time as well, and tested up into this bigger picture resistance. So that's kind of the bigger picture outlook. Okay, so the next thing we want to look at, kind of our what we call our roadmap, or the really key pieces of information, is what we call relative aggression bars. Okay, and we have three variations of relative aggression bars: level 1, level 2, and level 3. We really like to focus in on level 2 and level 3. These are what we call strong buying and selling aggression, or extreme buying and selling aggression. And when these come in, you really want to pay attention, especially level 3s. When one of these comes in, it's telling you there's some major activity in the market under the surface in the order flow, and you really want to pay attention to see if there's follow through or rejection. That's going to give us a very good real-time roadmap to the likely short-term direction of the market. So if I throw the relative aggression bars on the chart here, which I have now, so again, you see all I have is our bigger picture levels here, and then our relative aggression bars. So we've got some level 1 bars in here, buying and selling bars. Don't want to pay, you want to, they're interesting information, but you don't want to get too caught up in that. We really want to focus on level 2 and level 3 bars, okay? Especially level 3 bars. So today, what happened? We tested this resistance on the open. We started to get some level 1 buying, and then we busted through this resistance on some level 2, or some very strong buying, okay? You can see the high of this bar was taken out right away. We had another bar, and then we had a level 3 buying aggression bar. So when that happens, we really want to pay attention to that. We ask ourselves, can the low of this hold? And as long as the low of that hold can hold, or until something later on in the day happens where some selling comes in and has some follow through, we have to assume buyers are in control of this market. And what does that mean? It means, number one, you'd want to be very careful fighting that. So you'd want to avoid being on the long side. You don't want to try to be a hero necessarily. And then number two, it's giving you very clear evidence that shorter term bulls are in control. That also happens to match our bigger picture bias that bulls were in control. So at this point, it's really setting up that the bulls are clearly in control, and you want to find a way. I'm not going to necessarily talk about that. We have a lot of different ways you can trade this. But at this point, you know you want to be on the long side. You know the opportunity is very great. Okay, so again, you've got this level 3 bar. So until that low is taken out, or until some selling gets some follow through, and I wouldn't consider this follow through because it's inside the range of this earlier level 2 bar. For anyone that's really looking carefully, we talk about that. Then we've got some selling that's rejected. Here's some buying. This low of this buying holds. Another level 2 buying bar. Attempted move lower, attempted, I don't know if that's profit taking or if that's someone just trying to, predict the high, but they got blown out of the water. So it just continues higher, tests into this support zone, sells off mildly, tests it again and tries to do so on some buying aggression. But you can see here we couldn't get any follow through above this in this bigger picture resistance area. And then some selling starts to come in, and you see we actually get some follow through a little bit lower. Okay, that's our first sign when we start to get a little follow through, and especially here, that selling has come into the market. It doesn't mean selling has taken over. It just means instead of bulls being in control, what we call one-sided, we're now in a more two-sided type of a market activity. Okay, so we've gone from vertical bull to more two-sided back and forth activity. Okay, so that's kind of the roadmap of the relative aggression bars, and there's a lot of other ways you can use these relative aggression bars. I like to use them for trade entries, really help you stay on the right side of the market, to confirm breakouts. For example, here's a breakout of the high of the day at the time. It's happening on some major aggression. You can have confidence that breakout is legitimate. Whereas if it just broke out on a gray bar and there was nothing there, that's one of those head fakes. Okay, so that's one piece. If we throw this back on here, let me put on the support resistance as well. Okay, so you can see these are support resistance zone, red being resistance, green being support. Again, these are just one piece of the puzzle. This is not something, none of this stuff you'd want to just trade blindly. But when you have things that come together, that's when you have a nice edge. So what we have here is that all things equal, this is a red resistance zone. It's telling us this is where the market might pause. You can see we busted higher, the market paused here. It then turned over and turned green into support. Pretty good indication that this should be a good support zone as well. That also happens to correspond with our bigger picture bias. It happens to correspond with the aggression bars that we're showing. And the same thing here. This should be support when it gets to here. This yellow is what we call caution, which would normally be resistance, but because there's a lot of weight or a lot of strength in the market, you want to be a little careful. Now you can see it turned over to support here, and normally that'd be a great sign, except for the fact that we're trading right into this major resistance area, all-time highs. We're trading right into that, so you'd want to be a little careful with that. Okay. The next thing I want to put on there is our directional filter, short-term filter. Okay. So I'll throw that on there. Okay, and you can see at the bottom of the chart is a directional filter. So we started the day neutral. They went to bullish and strongly bullish. Okay, now again, this filter is just one piece of the puzzle. You wouldn't want to just blindly trust the filter, but it's giving you another piece of evidence, and it's increasing your edge just a couple more percentage points. So for example, if you were thinking about a long and a support zone in a bigger picture up bias, the filter is confirming that that looks good. Okay, if it was red, it wouldn't necessarily mean don't take it. It would just be saying you better think twice. Okay, and just because it's green, it's not saying take it for sure. It's saying, okay, it's green. That's giving you some extra confirmation if you've already got some evidence that's showing that's good trade location. Okay, so that's the filter. It can show neutral, it can show bullish, it can show bearish, it can show strongly bullish, it can show strongly bearish. Okay, so it's another piece of the puzzle that's helping you make better decisions in real time. Okay, next I'm going to put on the divergence and deceleration bars. Okay, now these divergences and decelerations are these triangles and these dots. They're just slightly different calculations of the same concept. Okay, and what they're telling us is that this is a very short-term indication of a potential stalling out of the market. Again, this is not something that you would blindly want to trade, but when you have a deceleration in an area that you're already thinking about a trade, it can give you that extra 1 or 2% confirmation. Or if you have a deceleration that's against the trade you're already in, it can give you pause to think, okay, the market may be slowing down. So again, these are not trade signals, black and white trade signals. These are simply giving us evidence on the very short term that the market's stalling out a bit. Okay, it's just telling us what's going on this minute, this second, that sort of thing. But when used in conjunction with other pieces of evidence, it can help aid your decision making. It's all about becoming a better decision maker in real time. That's what translates into better results. Okay, so those are the different pieces. You can see heading into the day, we're a bigger picture up bias. Here's our resistance. Here's our resistance that we shot through with strong aggression. We found support. Filter's green. Didn't get support here, but we were fighting bigger picture resistance. You can see this is when some selling started to get some follow through in here. The market went two-sided. So there's just a lot of different information. I wouldn't expect, if you're new to this, that you're watching this video and you understand everything I'm talking about. But if the idea resonates with you, I think you're going to love it. The idea of increasing your edge, and if you understand the power that can come from just increasing your edge a few percentage points, then this is something that probably would resonate with you nicely. Okay, so let's look at the YM. Here again, you can see, what are we looking at? Well, our filter went green pretty early. Our bigger picture bias heading into the day was up. Here's a high velocity move and a level 3 buying aggression bar with follow through. That's telling us bulls are very much in control of this market. You can see continuation higher with level 2 bar, level 2 bar, level 2. Level 3. Okay, so this is just showing us bulls are completely in control. Here's a level 3 buying bar, and then it attempted again. I don't know if that's profit taking or someone trying to call a high like we saw in the ES. That got rejected. Took out the high. It wasn't until the low of this bar, which held a little bit, finally got taken out. That's showing us the market has gone from vertical bull to more two-sided. Okay, and then you can see some selling again started to come in. We went to more of a consolidating market and traded between those two levels toward the end of the day. Okay, so again, bulls came in strong. Nothing changed until the low of this level 3 bar got taken out and some selling started to come in. So it's showing you what's going on under the surface of the market, so that at a minimum you can better stay on the right side of the market. Okay, here is the let's look at the Nasdaq. Same basic scenario. Okay, heading into the day, bigger picture bias is up. Filter goes green pretty early. Our first structure is a level 2 buying bar. It's low holds. We take out the high. Here comes some level 3 bars. Holds in support zone. Take out the highs on some buying aggression. It's not until this level 2 bar can't have its high, it doesn't have anything above it, and the low starts to get taken out. Now you can see it then traded against support and went back and forth, but that was our first sign that the pure bull control was possibly coming to an end and we were more two-sided. Then you can see some selling started to come in there and we went to more of a consolidating type of a market. So again, just a quick look at the Nasdaq, the YM, ES, trying to break down each of the pieces. Hopefully you get the concept here that this is not some black and white system. This is a really unique tool that if you're the type of person that likes to look at the market as a puzzle that can be figured out and likes to get as good of evidence as you can get, then this is something that would be worth your time. All right, let us know if you have any questions about that, and we'll talk soon. Have a great evening.